Yes, traders. So I had to change the currency pair. Now let's look at Euro USD. Okay. Look at this price action here, where the market is in an uptrend here, forming higher highs, higher lows, higher highs, higher lows, higher highs. Okay. Now in this case, you notice that the market forms a higher high over here. This is a higher high over here. Then fails to form a new higher high. This is it here. This high should be taken to show that there's a trend continuation, right? But then this high fails to take out this other high. Okay, price aggressively drops downward. What we are going to look at is the last candle that was from here, the last sell candle that was from here prior to this buy over here. Okay, this candle is not strong enough to push price above this high. Okay, so it is reducing the severity of price trading above this old high. Okay, so in future, when the market returns to this last sell candle over here, we are expecting to see a reaction from there. That's where the smart money is interested, because they have pending orders resting there. Okay, they are looking forward to mitigate their positions at that price level. So what we are going to do still, we are going to extend this last sell candle here across, and that is going to be our mitigation block, bearish mitigation block. Okay, that is 4-hour time frame, so it's going to be the 4-hour bearish mitigation block. We are going to label it 4-hour bearish mitigation block. You wait, when price returns to that mitigation block in future, study how it is going to react from there. Now you see, look at how beautifully price reacted from here and then sold off. I hope this is understood. So a mitigation block should not take liquidity above a high. Okay, it should only take liquidity below this low. So liquidity should only be taken in a one-sided position. Take note of that again, because you are going to see the difference when we study breaker blocks. Now let us look at a second example. Let's scan our chart to see if you can see something. It's going to be very challenging in the beginning, but trust me, in future you will hit it. Okay, don't worry. So this is an uptrend. This is a small uptrend over here. You see, higher high, higher low, higher high, higher low, higher high. Okay, then eventually we want to see another higher high. Okay, take out this high, but you see price fails to take out this high, so we have a failure swing here. It's also called a buyer's remorse, because buyers are unable to take price above here. Okay, so when price aggressively drops downward, and in future if it returns to the last sell candle, that was formed here prior to this failure swing, we want to see some form of reaction there. Okay, because the smart money is going to be selling off from there. So what we simply do is we are going to look at that sell candle, which is a mitigation block, a bearish mitigation block, and we are going to extend it across, just extend it across. Let's see. Unfortunately, price didn't actually go to this mitigation block, but to be honest, that's the saying. Sometimes it's going to fail. If price is so bearish, sometimes it's not going to reach there. But it's just like a few ticks short. Okay, just few pips short of touching this mitigation block. That would have been a very good one. But it happens. Sometimes the market will behave in that manner. So that is okay. Let's see if you can get another example again. Now, this is another one here. This is an uptrend where we have the market from higher lows. This is a low here, but this low is higher than this previous low, so it's a higher low. This is a high, it's higher than this high, so it's a higher low, and it continues. So we are expecting that when the market forms this higher high, it's going to form another higher high to take out this high, but unfortunately price fails to take out this high. Okay, then it drops aggressively. Now we are anticipating that when price returns to this last sell candle here, we should see some form of reaction from there. Okay, because that is a mitigation block, a bearish mitigation block. So what we are going to do is we are going to mark this last sell candle that was formed here, and we are going to extend it across and see how price will behave there. Look at it. Look at how price behaves beautifully when it returns to that last sell candle. I hope you are getting this last sell candle here. Let me zoom it. You see this candle here, the last one. I hope I can do it perfectly. You see, look at how price touches the low of that candle and then sells off from there in future. Oh, sorry. You have to go through this, okay? See, look at how price touches this low and then reacts from there aggressively and sells off. See, it sells off from there in future. You see, so mitigation blocks and breaker blocks are very powerful. This is the bearish one. You can go over your charts and just try to see if you can spot things like this, okay? Try to see if you can spot things like this. If you don't see it on, this is Euro USD. If you don't see it, you can check GBP USD. If you don't see AUD USD, check all the currency pairs. And if you don't see it on the 4-hour time frame, you can go to the 1-hour time frame also, okay? Price action is fractal, which means things that form on a higher time frame will also form a lower time frame. It's basically the same thing. It's happening on a higher time frame, on a lower time frame. They are all the same. So you can just scan the market and then see if you can spot them, okay? If you don't see on the 1 hour, you go to the 15 minutes. You are going to see breaker blocks or mitigation blocks also on the 15-minute time frame. It's very, very possible. They form almost every day. You just need to train yourself how to spot them. It's going to be difficult at the beginning, but trust me, in future you will get used to this. If you cannot see on a 15 minute, you can still go to the daily, okay? Go to the daily time frame and scan the market. You will see it. Trust me, you will see it. Let's see if you can see anyone on the daily time frame. This is Euro USD again, like I said. Let's see. Okay, let's see this one. The market is in an uptrend here, forming higher highs, higher lows, higher highs, higher lows, and then a higher high. We are expecting that this high should trade above here and take out this other high, but it fails, okay? It fails, and then it sells off from there downward. I'm sorry about that. This video is raw. I'm not going to edit it. So price forms a higher high, a higher low. We want to see it form another higher high, but then it fails and then sells off from here. So we expect that when price returns to the last sell candle that was formed prior to that move higher, we should see some form of reaction from there, because the smart money will be interested to take trades from here. So what we are simply going to do, we are going to extend this last sell candle across, okay? Extend it across and study how price came back to that candle in future and sold off from there. I hope this is clear. So in future, I'm going to teach you how you can use these other blocks, how you can measure them, because they have parts, okay? They are divided into quadrants, and there are particular levels on an order block where price is going to behave in a particular manner. Don't worry, we are going to study all of that. So just go through your chart and see if you can spot them. I know it's going to be difficult, but don't worry, you are going to understand it. Thank you so very much. We are going to do more examples as we progress in our mentorship course. Don't worry, it's going to be difficult, but don't worry, you'll get it. Don't worry, I promise you. Don't worry. All right, let me end it here, and let's see if you can even go to the lower time frame and spot any one of them. This is the 3-minute time frame. This is 3 minutes. This is almost like a mitigation. No, it is not. It's a breaker block, which you are going to see the difference pretty much. Don't worry. Let me see if I can spot one here. Let me see if I can spot one on a lower time frame to show you that price action is actually fractal, okay? Things that happen in the lower time frame will also happen on a higher time frame. This is 3 minutes, okay? An uptrend, higher high, higher low, higher high. We want to see the market form what? A higher high over here, but then it fails over here and sells off, okay? Now let's see if the price finally returns to the last sell candle that was formed prior to that buy over there. This is the last sell candle that was formed here prior to this move higher. This is the problem with trading view. You see a lot of ads. Look at something. This last candle here, that's a bearish mitigation block on a 3-minute time frame. You see how price later returns to this last sell candle here, trades into it and then sells off. That's how you should be able to identify these things. You see, that's our bearish breaker block on a 3-minute time frame. So if you sold off from there, you should have made some profit in the market. All right, thank you so much. Thank you. All right, bye.